we bought a case of wine. We walked in and said, we want to buy a case of wine, which they were super excited about because usually they have to wine and dine you first and samples and all that. So we're like, let's just give me a case of wine. We're going to give it to our guests. And also, can you give us something free for our guests? And so they said, sure. Like they hadn't done it before, but they're like, we'll create a free flight for people so they can come in, taste the wines, and it's going to lead to more sales for them. So we leave a bottle of their wine there and we say, welcome. We write a little note that says, welcome. Here's a bottle from a local winery. If you want to try more wines from there, here's a free flight. Cost us nothing. And it creates this experience and everyone comments, like, wow, they gave us this free local wine and we got a free flight when we went there and the winery's happy. And so stuff like that, I think makes big impacts.
This is episode number 82 of the Short-Term Rental Success Stories podcast. Are you an investor that's looking to have your home professionally managed? Go to cohostit.com for more information. Welcome back to Short-Term Rental Success Stories. I'm your host, Julian Sage. This is a show where I talk to hosts about their journeys in starting and growing their short-term rental business. My goal is that you'll be able to walk away with practical information that'll help you become a better host and learn how to scale your business. Like any exceptional host, we all strive for 5-star reviews, so please go on over to iTunes and let us know what you enjoy, as it really helps support the show. If you haven't done so already, go on over to our Facebook group, The Host Nation, to connect with the community. Hey, what is going on, Host Nation? I'm super excited to be back again with you this week. Today I have the honor of speaking with Kirby Atwell. Kirby is a real estate investor that has 6 short-term rentals in Michigan City, as well as 3 other long-term rentals, an 11-unit apartment building, but he's been switching his whole portfolio from long to short. So in this episode, Kirby shares his reasons as to why he switched to short-term rentals, how he's been able to find amazing deals at cashflow, and how he's able to find short-term rental properties in non-vacation rental destinations, such as smaller, more urban areas that maybe you wouldn't even really think of putting a short-term rental property. If you'd like my show notes for this episode, go to shorttermsage.com/STR82, or if you like my show notes sent directly to your inbox every week, then go to shorttermsage.com/show notes. With all that being said, on to this week's conversation. Hey, welcome back, Host Nation, to another episode of Short-Term Rental Success Stories. In this episode, I have the special honor of speaking with Kirby Atwell. Kirby, would you please introduce yourself to the Host Nation and let them know who you are and what inspired you to get into short-term rentals?
Yeah, sure. Well, thanks initially for letting me come on the show. I'm a huge fan. I've been listening to a lot of episodes, so I love what you guys are putting out here with short-term rental success stories. My name's Kirby Atwell. I'm originally from Chicago, and I am kind of approaching short-term rentals from the perspective of a real estate investor. So I served in the military and got out and always wanted to be a real estate investor. I bought a few rentals while I was in the Army back in the early 2000s and got out, went straight into it and started flipping properties. And just because I didn't think I had the capital or wasn't able to attain the capital for rental properties, which I really wanted to do. And so I did that for a while, realized that was sort of a treadmill that I was never going to get off of if I didn't start accumulating assets. So I decided to basically, my partners bought me out of my first business after about 5 years of flipping. We had done about 70 flips throughout the Chicagoland area. And I decided, this is not for me. I don't want to continue on this treadmill. And so they bought me out of that and I started buying long-term rentals. And it actually, I liked it. It was something I was excited about initially. I was buying mostly properties that I was rehabbing for homeless veterans. And the model worked, but what I kept hearing about short-term rentals, I kept hearing people, the numbers and I was always drawn towards it. I actually signed up for couch surfing back in the day when that was like first coming out I think it was like 2007 or something like that. So I was living in Hawaii in the military and I never got to host anyone because I was always gone. But I loved the idea of it. And I loved the idea of hosting people when they're on vacation and having fun. And so finally, after a few years of buying long-term rentals, I built a decent portfolio and, I had moved from Chicago over to Indiana where the price points are much lower, taxes are much lower, but there's a draw for, Lake Michigan. It's kind of like, I live in Northwest Indiana, which is the southern tip of Lake Michigan. So a lot of people want to travel there, especially in the summer, but even in the winter, there's, a casino and outlet mall and stuff all around where I live in Michigan City area. So my wife and I bought a house there, and we decided we're going to turn our basement into an apartment. And so that was our first foray into it in 2017. And it just worked incredible. And I know that's how you guys started as well. And it was just every single day was booked up in the summer. My wife didn't want to rent it in the winter because we get some significant weather here, and she was worried. We have a real steep driveway, and so she was worried a little bit about liability. I would have rented it all year, but she's a little more cautious. So we rented it all summer and booked up in it. I mean, we made it was about just over $20,000 per summer for the last couple summers. And it was just a great way to offset our mortgage. And so we kind of got hooked on it. And so about a year ago, we decided we're going to expand this and start buying single family homes. And so we've been buying, rehabbing, and renting these single family homes in the Michigan City area.
Wow, so lots to unpack there. I want to go back to, just kind of back to your military experience, and that mindset shift from, just kind of doing a job, and then you got out and you were in real estate, but you felt like you were doing a job again as well.
Yeah, big time. And that's the old cliche story. I read Rich Dad Poor Dad when I was in the I was in the military and got hooked immediately. And so I bought a few rentals, and that's what I wanted to always do. And I didn't really understand the difference between rental properties and flipping. I thought it's all real estate investing. It all kind of leads to the same place, but it doesn't. Accumulating assets is really the way to freedom, in my opinion. And really, I just had created this job that, we kept growing. We ended up at the peak, we had 13 staff members, we had an office, we had 22 projects going at the same time. Everyone was telling us we were successful, and I was bringing home no more money than when we first started, but I had a lot more problems, a lot more chaos in my life. And so I was like, this is crazy. I'm not building any wealth long term. And the whole reason I got into this was financial freedom.
That's a very, I think you said a really profound thing. People are telling you that you're successful, maybe it looked like you were successful. I mean, your company's growing, you're taking on more people, but you said that you're not making any more. For investors or people that are getting started into real estate or into any business, what do you tell them, or how would you help someone that is maybe feeling like, they're doing a lot more, but they're not receiving that benefit? How do you transition over from that?
Yeah, great question. So what I mean by not making any more is I wasn't making more profit. So there's a huge difference, obviously, between revenue and profit. So we were multi-million-dollar company in terms of revenue. We were buying these houses, rehabbing them. We're getting into $1 million+ houses, so they're high-end houses. So we had a ton of revenue flowing through the business, but the margin at the end of the day, once we paid all our expenses, never grew, and actually got smaller. And so I would say, it's funny because at that point it looked like tons of success. We were invited to speak at all these real estate conferences, and had the fancy before and after pictures. Social media was on point. We looked the part. We looked successful, and I see that a lot with real estate investors. But then when I left that model, I decided I'm going to just focus on high margin activities, and I'm not going to have any overhead, no office, no staff. I'll bring on contractors on an as needed basis for specific tasks. And my profit and bank account changed drastically. I mean, I built so much more wealth in the next couple of years than I had in the previous years. And nobody even knew, nobody invited, it looked like I wasn't doing anything because I didn't have the fancy before and afters, but I was one at a time, just accumulating assets. I was buying a beat up house, rehabbing it, building in a ton of equity, which is basically a little bank account sitting there that you can tap into anytime. And then cash flow. So each one would rent. And so I'd make, $400 or $500 on each one, and then move on and do the next one. And so I loved it. And then realized that in short-term rentals, that cash flow can be much higher, but you can do the exact same model.
So you were able to quit, that cycle. Like, it's a lot of busy work. And I think even like, as, like we're growing a podcast and the media and trying to grow our management and, investors, it's like you can be doing a lot and you can feel like you're making progress, but at the same time, like the more money that you're making, the more money you're spending. And it's really like, well, honestly, maybe the most return I was getting for my time was when it was just like a basement unit in my house and I wasn't doing anything. It's like, that doesn't make sense. Like, how could I be doing less and be making more? So for long-term rentals, because that's what you transitioned to first, was it like, how big of an impact was that from taking, from maybe like, even a job, let's just say like a job or, another business, and then moving into something that's more passive, but with long-term rentals? How was that transition?
Yeah. So I always recommend to people, you always have to have some passive or wealth building activity going on. Or my recommendation is you should have some passive or wealth building activity. For most people, that's investing in their 401k. Like that's it. And then you have to have an active component. So a lot of people will not realize that. They'll jump into buying rentals and they'll say, I'm going to do it full time because it's going to pay me a whole bunch. And it's really tough. You got it. Like that's mostly wealth building, especially in the beginning, until you can get enough cash flow that that's to support you. So for me, when I transitioned, I realized that from the flipping days, and so what I did is I just wholesaled properties, which basically got properties under contract because I was putting out marketing to find my deals, and a lot of them didn't fit my buying protocol for the rentals, like the area that I wanted to buy in or the numbers or whatever. They work better for flips or whatever. So I would just take those and talk to friends who were also real estate investors, and I'd sell those for a fee, those leads or those deals for a fee. And that was what paid my bills initially. And then I was asked to come on as a CFO of a nonprofit that I'm really passionate about. And so that replaced the wholesaling activity. And I just continued to add more and more rentals to my portfolio.
And what was that transition like, going from long term to short term? Because now it seems like your primary focus is on short term rentals.
Yeah. Yeah. I mean, they both can be very profitable. What I always tell people is like, don't settle for the common, a lot of people say the 1% rule is very common in real estate investing. So whatever you buy the property for, it should rent for 1% of that gross. Like, so if you buy for 100,000, your rent you should collect is $1,000. Yeah, I mean, that can work, but you're going to need to accumulate a lot of long-term rentals to really create much wealth or much income. And that also doesn't take into account, rehabbing equity into them up front. That's like buying them turnkey. So I always say, like, try to find places where there's disparity, where there's areas like where there's like an incongruence in the purchase price to rent ratio. It just doesn't make sense. And so for me, initially that was these voucher programs. Like, you could basically, the VA gives a voucher to these homeless veterans and they could take them and rent any house. And most landlords won't rent to them. They just hear homeless veterans and they think PTSD, alcohol, drugs, whatever. And so I kind of built my business around this. Being a veteran myself, I had rapport with these tenants. And so I'd rehab these really nice houses, put these tenants in them. And it worked well. They, overall, I had few problems. But the houses do get beat up over time. And so for me, like, one of the parts I love is like transforming these houses from like nasty into these gorgeous houses. And it was like so difficult for me to visit these properties and see like the landscaping getting destroyed and just the wear and tear on them. And I knew, and once they moved out several years later, like, and I had to go back and rehab them again. So I was really drawn to the vacation rental model, and also fell in love with the idea that when people would come and stay in our basement, like it was always like people would be leaving, but somebody else like really excited about their vacation would be coming in. So it was like constantly like these people who were like on vacation, like laid back, sitting out on like our front lawn chairs in front and like just enjoying life. And so I loved being able to host that and create that experience. So I realized eventually, like the long-term model just was not for me. The short-term model, I can keep the properties perfect. They're clean, several times a week, and I can still rehab these really nice houses and create these experiences. So that was like where the transition happened for me, and that's all I want to do. So I've sold off a lot of the long-term rentals, and I'm just rolling that equity into buying more short-term.
And how many long-term rentals would you do you equate like a short-term rental to a long-term rental? Like how many would it take for you to be able to earn that income from a long-term rental versus one of your short terms?
Yeah, yeah, good question. So the equity that I'm creating is still the same. So I only take on a project if I can create about, minimum of $30,000 to $40,000 of equity in the property. So, I'm buying it for say 50,000. I put another 50,000 into it, and it needs to appraise for 130, 140 when I'm done to make it worth doing that rehab. So basically, every time I buy a property, my net worth goes up 30 to $40,000. And then from a cash flow perspective, uh, I didn't really know what to expect. I was kind of looking at comps. But about a year ago, when we started buying these single family homes, I was just kind of basing it off of comps. It's actually worked out much better than what the comps showed. I think I didn't take into account that we were going to have like fully rehab properties that are like top of the line. And also, COVID actually has helped us because a lot of people want to get away for a few days, and they want to get out of Chicago or Michigan, where it's things are tighter, a lot more people, and so we've been booked up constantly, and they don't want to stay in hotels. So it's worked out well. So to answer your question, initially for long-term rentals, I thought if I accumulate 24 of these properties, each one pays $500 in cash flow, that's $12,000 for forever. When I've done the math to convert it to short-term rentals, really it's like 7 or 8 is all I need to create the same amount of income, and it's actually lower expense ratio as well. In terms of like my cost of financing, I'm buying them at lower prices than I was previously when I was buying in Chicago. So yeah, so it's about 7 or 8 to the 24 that I had initially calculated.
So you said around 24 long-term rentals. So cash flowing each short-term rental is around 15 to 2,000.
Yeah, exactly. 1,500 is on average. So for me over the summer, we were grossing on the couple properties that we have rented. We have a few that are under rehab right now that are going to be listed very soon. But for the few that were on the market, we're getting around $4,000 to $5,000 a month gross. So we were netting much more than 1,500, but I'm anticipating, even though in the fall it's still strong bookings, I'm anticipating once we get into January, February, it's going to be a lot less.
Got it. So because you were able to generate so much more from these properties, were you actually able to find like cheaper properties, like properties that you would typically look over, where maybe the margins just weren't good enough as a long-term rental, and as a short-term rental, it just made more sense?
Yeah, exactly. And I think that's the big misconception with short-term rentals, is that people think that they need to be in high-end areas and that they need to be like, they're like luxury vacation properties. So I feel like Michigan City is like a perfect area, and it's also one that people overlook constantly. Like, so there's not a ton of competition, but so it's an area where it's like a working class area, but it's a beach community. So we've got $1 million houses on the beach, but then you got $50,000 houses downtown, and it's a transitioning area. There's still some areas where it's a little bit rougher, and then there's areas where people are driving Bentleys in the summer, because their vacation summer home is there. So in that type, again, it's like these incongruencies in the market. In an area like that is where you can find great deals. And so I'm not buying right on the beach because you're paying a massive premium on the beach. But I've found that people don't really care if they're right on the beach. A family will come, and as long as they're a few blocks away from the beach, they're good with that. So I'm finding these houses for, and I'm putting out marketing for off market deals that are really beat up. So I'm buying houses for like $40,000, and I'm fixing them up, making them perfect for, say 100,000, 110,000 all in. And these houses would rent for $1,100 long term. And so most people don't think about doing short-term rentals. They just see the beach ones and they think that's where you do short-term rentals. But so it's worked great. And so people will pay a little bit less to be away from the beach, but it's still, my average is about 130 a night. So, but every single night it's booked up throughout the summer. It's been booked up, now it's getting into like long weekends, like 3-4 day weekends. So there'll be like a gap of 1 or 2 days in between bookings. But, for that type of income, it's crazy how you can buy something that cheap and have such low overhead in terms of your mortgage, and then taxes also. Like it's assessed at $100,000, and it's a low tax rate in Indiana, so it's $1,000 or less per year for the annual taxes, which is crazy compared to like where I came from in Chicago, where you're paying like $5,000 for the same house per year in taxes. So it still makes sense to do it as a long term. If I had to flip the switch and Airbnb went away, I could switch back. And I always recommend that. Like I would never want to get into something where COVID hits and I'm just screwed. I could switch it back to long term, but short term, the cash flow is just crazy high.
Yeah. So what you were kind of hitting on was that, most people, when they think of, short-term rentals, they think of like the vacation rentals on the beach, probably by the lake. But you're saying you're actually able to pick up these, in urban areas where maybe it's not even like the best, like not downtown, not, next to where everything is happening, and you're still able to find these properties and do really well.
Yeah. Yeah. And it's like close to downtown. There's still like restaurants and stuff around, but it's in just like a neighborhood. It's not, there's no other vacation rentals around me typically. But it works well. And when I show the map, they can see it's like a mile from the beach. It's a mile from downtown. Like it's still close enough, but, you're not paying that premium.
Are there a lot of other people that are kind of utilizing the same strategy, or are most people looking at properties that you're looking at and saying like, hey, this is what it's going to pull in as a long-term rental?
Yeah, exactly. People are shocked. Even realtors, like, a couple of realtors I'll talk to, and they just assume I'm going to do long-term rentals when I'm buying these properties, because that's what's all around me. And it's not right on the beach. And so, when I turn it into a short-term rental and I tell them what it's making, they're like, that's crazy. Like they never would have guessed that you could do that. But people want to travel all over. So it's not just, and it's not just because we've got a beach too. This works. I think it would work anywhere, but you want to have some draws. And I think the thing that's going to save us too is there's a really nice casino that was built like late 90s. So it's newer. It's right downtown in this area. And that's sold out every Friday and Saturday. Their hotel, they have a hotel attached. So, I think that's going to draw people year round. And then there's a outlet mall, and there's a lot of restaurants and stuff. So, that will offset some of the off season stuff. Cause people will still want to get away from Chicago and just come out. And there's a national park right there too. So people can snowshoe and do whatever in the winter as well.
Hey, this is Julian, and I wanted to be able to give you our newest book, Airbnb Secrets Revealed, How to Build a Fortune on Airbnb Without Owning Property. In this book, we talk about the concepts of rental arbitrage investing, as well as co-hosting, and how you can build a business leveraging other people's properties. This book is perfect for the new short-term rental investor, and it's something that I wish that I had when I first started, as it would have saved me a lot of trouble and helped me to understand how to be able to leverage the power of short-term rental investing in your own real estate portfolio. If you'd like to get our newest book completely for free, go to shorttermsage.com/free book. Now, back to the show. What has been the most challenging part of starting your short-term rental business?
I think in the beginning, you don't really know that the numbers will work. It's all, you're everything is like doing it for the first time, just kind of going out on a limb, and hoping. And I based it on the comps. I looked at the comps and saw what they're renting for. And I was like, if this is true, what I think is true, like these numbers are going to be great. And So you got to just go out and do the first one. And that's I think the most challenging, especially when people are like, why would you do a short-term rental here? It's all long-term rentals. And so kind of bucking traditional knowledge, I guess, was the hardest part in doing that first one. And then once that was done, it was like, I'm not looking back. Like, how many more of these can I get done?
So that first roadblock was really just the proof of concept, seeing if it worked. What about operating it? Did you have like any training or any experience? Did you hire out a property manager to manage that first property?
Yeah, good question. So I didn't have experience. I mean, other than we just did our basement one, and we learned a lot from that. And so, what I realized is that the bar is set pretty low for hosts, especially if you're an investor and you're buying these properties and fixing them up, because you're competing against people who like roll out of bed one day and they're like, oh, I got this extra bedroom. I'm going to go in that bedroom and take pictures with my iPhone and list it on Airbnb today. And like, they don't even make the bed. And so like, that's some of your competition. So I think going above and beyond in some areas, it just makes all the difference. It is the most time consuming part of it is the rehab and then the setup. And that's different for investors. I'm approaching it from an investor standpoint just because that's like in my blood. I want to like own these assets. I think a lot of people are co-hosts or sign a master lease and you can just jump right into it, which is awesome. But there's pros and cons to each, right? So as an investor, you're going to capture that upside, but it's going to take you a lot longer. But if you are an investor, figuring out where you can kind of capitalize on that. Like, so I'm in a little bit of a area that's a little more working class area. So like maybe guests come in and they're like, they're not as like wowed as if they're coming to the beach. So I need to make that house when they walk in, they're just like, oh my gosh, this is amazing. Because their experience coming up to the house wasn't necessarily as amazing as it would be in a really high end area. But if you have a high end area or you're like in a city where there's all these amenities and stuff, that's probably what's drawing people there. They're wowed by that. And then if they come into the house and it's not like everything is totally gut rehabbed, it's probably not as big of a deal. So you got to like understand the psychology a little bit, and then understand what makes the impact, because you could nickel and dime yourself to death. I mean, my wife is our designer and she has amazing eye. But we want to create like a Picasso art, piece for people when they walk in. Like, it's just, we want everything to be perfect. And so you could buy all these things, but you got to start to realize like what makes the biggest impact. So what are the few things? So for like an example, we put in these Google speakers that are like the little Google speakers in each room that people can play music on, and then they can connect them together and play music throughout the house. And we've had so many comments on those from guests that our kids loved playing with those, and it's just like, it's weird and they're really cheap. They're like $30 a speaker or something like that, and they connect up to the Wi-Fi. And so spending that money makes sense, but like little decorations that, you're paying retail for here and there, that probably you're not going to get the return on that. So you got to think through like what's going to offer the biggest return and create the experience. And if somebody's commenting in your reviews over and over, they love something, do more of that thing. We also offer a bottle of wine. There's a winery not too far from us. So we went to the winery. We bought a case of wine. We walked in and said, we want to buy a case of wine, which they were super excited about because usually they have to wine and dine you first and samples and all that. So we're like, let's just give me a case of wine. We're going to give it to our guests. And also, can you give us something free for our guests? And so they said, sure. Like, they hadn't done it before, but they're like, we'll create a free flight for people so they can come in, taste the wines, and it's going to lead to more sales for them. So we leave a bottle of their wine there and we say, welcome. We write a little note that says, welcome. Here's a bottle from a local winery. If you want to try more wines from there, here's a free flight. Cost us nothing. And it creates this experience, and everyone comments, like, wow, they gave us this free local wine and we got a free like flight when we went there, and the winery's happy. And so stuff like that, I think, makes big impacts.
Wow, that's really cool. The has the winery like came back to you and said like, hey, you guys are giving us a good amount of business, or have you not heard back from them yet about that?
They haven't yet. I'm assuming they're going to at some point because they just sent us like a massive amount of these coupons, and it wasn't like one per person or an expiration date. So, I'm waiting for like a guest to like just make a copy of a whole bunch and go in and have like 50 flights of free wine. But so far, it's worked out, and I think they get enough people come in that buy other stuff that they're happy about it.
That's really yeah, that's a really good idea, and I like what you said about the like the Google speakers, and it just kind of makes me think like people like what you said, you could spend a lot of money on the decorations or like on the things that maybe people they're nice and people definitely can enhance your total experience, but you're looking for those unique things that maybe they don't experience at their own home. It's like something that it's like going to be a memory, like, oh wow, like I can play music throughout the whole house. Like that's something that most people probably don't do at their own house, but when they're on vacation or they're going out, it's just like something that is unique, creates that experience, like you said.
Yeah, yeah, exactly. So it's fun to kind of like think through that and figure out what's going to kind of be above and beyond that they weren't expecting.
What has been the most challenging part of scaling your short-term rental business?
Um, it's being the investor. That's the downside of it. I think if I was just co-hosting, it would. There's other unique challenges, but to doing that model. But for an investor, I'm buying these and rehabbing each one. So like the one that we're decorating, my wife was there yesterday, and we are dropping stuff off, and she's setting everything up, and it was a lot of fun. But we bought that one July 1st, so we've been gut rehabbing it since, and now it's turning into this great Airbnb property. But we've lost out on 3 months of potential income, and also it's just a ton of work. Like during that time, I got to visit it and keep my contract. I have a great contractor, luckily, from doing so many rehabs in the past, uh, but there's a lot of decisions and a lot of work that goes into creating that asset and turning it into what you want it to be. So I think that's the biggest challenge to scaling. But my goal, and I think that the key is to know yourself in this business and know like what makes you excited about the business. And for me, I hear people say I'm managing 100 properties, and I'm just like, oh man, that sounds terrible, like because I just know my personality. That's 100 people, 100 owners to deal with, and you know, um, it's almost like working for someone else. And I got into this to work for myself and build a portfolio of performing assets. And so my goal has always been to figure out the highest performing assets that I can buy and the fewest, because each one is a set of problems and it's a set of time. And so there's all these automations and everything that you can do, but there's also just it requires a lot more of your attention. And so my goal is just freedom with the least number of assets. So I don't need to scale. I don't ever want to own 100 of these properties. I mean, ideally, I kind of have a goal of 10 in my personal LLC, 10 in my self-directed IRA, and then 10 in I set up an opportunity zone fund because where I'm buying is an opportunity zone, and I had a bunch of capital gains from the sales of my long-term rentals that I rolled into the opportunity zone. So I was kind of like thinking if I own 10 in each of those, that would be more than enough to build long-term wealth. Most of it would be tax-free because of the opportunity zone and the IRA. And then the 10 that are in my personal business would be more than enough to live off of. So I think that's very manageable. We just brought on a VA who is helping us with all our guest relations, and that's been a huge load off. And so I think that's the long term goal, I guess.
So you're doing all the management of these properties yourself. You're not hiring out a property manager.
Yeah, I should give my wife credit because she actually is doing all the managing. She's a full-time mom also with our two young kids, but she managed our basement apartment, so she's just been taking on the new listings that we have. But she's gotten to a point where she feels like she's not paying enough attention to the kids during the day when guests have needs and that sort of thing. And it's a lot of repetitive tasks that it's very easy to hand this over to a great guest relations person that's virtual, and it's not that costly. So we're at a point where we feel like it makes sense to do that.
And how did you source that person and be able to plug them into the systems that you're currently using?
Yeah, it was a little bit organic. So at the beginning of this year, I decided in my real estate investing business, I also have a podcast and a YouTube channel. So I wanted to get some virtual help for all of that. And so I found out about Powerhouse Planning, which is this company that hires spouses of military people because they're constantly moving around. It's hard for them to have long-term work that's not virtual, but they're extremely well qualified in a lot of places or in a lot of cases. So they're like the perfect virtual workforce, and so Powerhouse has all these experts in different fields like marketing and business growth and finances. And so you go to them with your business and say, here's the things that I need. And so then they'll take their team and give you a few hours a week from a designer, a few hours a week from a copywriter, a few hours a week from a executive assistant. And so I brought on them at the beginning of the year, mostly for administrative work. Heather is my EA, and she's just been amazing, just took a huge load off of me. And so her role has just been like, she's like, here's where I think I can help you, and take time off your plate. And it's been super helpful. And so did that for about 6 months. And then recently we talked about increasing my contract with them and bringing on an additional person, Jennifer, who's now my guest relations person. And she just came on as guest relations. And so her specific role is going to be responding. We've got pretty much the same responses set up, but, replying to guests quickly. And then if there's maintenance issues, helping to line that stuff up and lining up the cleaners and all that stuff.
Is there anything that you utilize, like any other tools or systems that you're implementing in your business to help save you time while you're focused on the investor and finding the properties, rehabbing them, getting them up and running?
So I've tried different tools at different times. When you were on my show, we talked a little bit about the Smart B&B with the responses, and I think I'm a little too much of a control freak. My wife is too. Like she didn't like that it sounded too automated, and we probably just didn't work at it enough to make it sound more natural. So we went away from that, and I think with the number of properties that we have, it's easy for us to have. Now Jennifer is just responding, and we've got the copy and paste type of responses in a lot of cases. But so there's been tools, but I don't use. I'm on Google Suite and Google Drive, and I'll use Loom to record my screen for Jennifer, for Heather, if there's some specific tasks that I want done. And so then you just record it, basically just records a video of your screen, and then you can send it to them, and it tells them how you want stuff done. And so that's been the main tools really in the Airbnb side of things. I do have in the real estate investing side of things to bring in the leads and stuff. I'm doing Facebook ads that drive to my Carrot website. And we have some automation tools there, but for the Airbnb side, it's mostly we rely on Airbnb itself, and that's been okay for us. I think you can get into a ton of automations, but for us, it just hasn't been worth the cost because we have such a small scale.
And you said for generating those leads, you're running Facebook ads, but then it goes to a Carrot website. I'm not familiar with that. Is that like any of these website builders?
It's specifically for real estate investors and realtors. So it's just a really well put together website. So carrot.com is the company that creates the website. And it's built well for SEO. And so basically the Facebook ads, we spend about $1,000 a month to target motivated sellers in Michigan City area. And then when they see our ad, it directs them to our Carrots, our website, which is Greenbat Homes, is my company. And that website was built by Carrot. And so when they fill out the form on the website, it goes into the carrot.com back end of the site. And so all those leads populate there, and it's got all the information on those properties. So I can call them, set up a meeting, go out and purchase that house. And so that's like the automated process for how I'm getting most of these deals.
Do you know like your numbers as far as like conversions, like cost to acquire lead and stuff like that?
Somewhat. Since I'm doing it on a smaller scale, I don't. It's probably not super accurate, but I've got four deals this year from that. So, which sounds very low, I'm sure to people. I started doing this in December. I set up my Carrot site and started driving $1,000 a month. So I spent, what's that, like $9,000 in Facebook ads. And it's led to 4 deals. But again, like each deal, I'm not doing a deal unless I'm creating at least $40,000 in equity. So, 4 times 4, that's $160,000 that we've created in equity from the $9,000 spend. Plus each one is cash flowing like crazy. So the numbers work. I haven't calculated exactly what it is, but it's working.
It's a good return on your investment.
Yeah.
And
I don't need to do like a massive volume. So it's helpful in that regard too. I think there's some high volume wholesalers out there that really have to pay attention to this because they need to do 10 deals or 20 deals a month to support their team and support their operations. I'm really like 1 deal a month to 1 deal every other month is good for me. And it's enough.
And what would you do differently if you had to start from scratch?
I'd start sooner. I'd start this model sooner. I drug my feet because I was listening to people say that, that probably wouldn't work there. Or what about the winter? And just anyone who's not from, even my contractor, like he's not like we were working on our house. We bought this house on the beach back in 2017, and it was all original. It was just, it needed a full gut rehab. So we're rehabbing the house. And we hadn't even thought about putting an apartment in the basement. But as we're getting toward the end, we're like, this basement is set up perfect. It's a walkout. It's got a separate entrance. We can make a separate apartment. And my contractor's like, oh, you don't want to do that. Like you're going to have people coming in and out of here. And, some family members and friends were saying, really, do you want, what if some axe murderer comes and stays in your basement? And so, you got all these people. And so you have that in the back of your head, but we're like, what's the downside? We're paying $30,000 extra to turn this basement into a beautiful apartment. I guarantee when we sell the property, we're going to get $30,000 extra in the price because of this apartment, probably a lot more because we can show how much it's generated. And so let's try it. And so we tried it and it worked great. So I wish, we had started buying more single family homes and doing this sooner as well.
And if you could give one piece of advice to someone who's looking to start their own short-term rental business, whether maybe that's as an investor, someone that's going out there and acquiring properties, what would you tell them?
I think it's got to be a combination of 2 things. And I think the reason people get into this is because it can be very lucrative. And so people focus mostly on that side of it. And so the combination is, number one, the numbers do have to work. Like you got to really calculate it out and make sure that the model that you're putting in place works, because this is going to be a long-term thing. It's not like you try it and start and stop like you could other businesses. So number one, the numbers have to work. But number 2, like you got to enjoy this too. Like people are coming on vacation. Like if you're all stressed out and you hate, like, you don't enjoy providing these experiences for people, that's just not in your DNA. It's not, it doesn't match your personality, then it's not going to work for you. So, I think if you have a combination of those 2 things, you've got a recipe for incredible success in this business.
And have you just going back, have you experienced a full winter already with your rentals?
we have not, other than our basement, which we didn't rent in the winter. So it's definitely an experience. And I've been watching, the bookings and like the calendar, and I'm like, holding my breath. But right now, we're still booked out 2 to 3 weeks in advance, and we continue to keep getting bookings further out. Um, so I'm hopeful that continues. I think in a worst case scenario, if nobody rented from January through the end of March, which I think is highly, highly unlikely because we would adjust the pricing and figure out a way to get it booked. We could rent to traveling nurses. There's a hospital nearby. There's things you can get creative on to bring in income in the off season. But if nobody rented in those 3 months, we would still be way ahead of a long-term rental numbers. So I take comfort in that, but I think we're going to get creative and figure out a way to get some income in those months.
Awesome. And what's a question that maybe you have as a real estate investor? If you could ask someone that's maybe at the similar scale than you, or maybe at that next step where you're trying to go, what would you ask them?
So what would I ask them? That's a good question. I guess, yeah. So I would probably focus on somebody who's ahead of where I'm at, and try to ask and be receptive to information, understanding what I'm not. How can I phrase this? So, what am I not asking that I should be asking? I think that's a good question to ask people who are ahead of you, because a lot of times you don't know the question that you should be asking. And even when you hear the answer to something, a lot of times you'll write it off because you think you already know the answer. And so that's one that I always like, is like, from your perspective, now you're like, a year or 5 years ahead of me. And find people that obviously you want your business to look like. If they're running something that, it looks successful, but it's not the business you want to build, then don't try to emulate that. Find someone that has a business that you want to build, and emulate their actions, and ask them, like, what is it that I'm not seeing right now?
And what is that business that you could see yourself emulating?
And I didn't even mention this, but so I eventually want to just own these properties and have the freedom to kind of raise my kids and do what we want. We want to have a couple more kids, and so we're buying a farm right now. We're buying a 10-acre farm, and we're going to put some tiny house rentals on there, which are not too far from where we're at. And so I think the question I would have is around someone who's done this before, this particular model, because I think it's going to be different than the single family model. And what are the things that could amp our our income and our success doing this model, and what are the landmines that we're not thinking about that we need to avoid, because it's several properties on the same acreage. So
Yeah, for you and for those that are listening, one episode that I always kind of refer back to is Dawn Parr. Can't remember the exact number, but Dawn Parr, she's in Lubbock, Texas, and she was working with traveling nurses, or with nurses. She was in the medical industry, and then actually retired from that to start her short-term rental business. Basically had a piece of land, and then she started building tiny homes, like container homes, developing little properties. And I think she's at around like 7 or 8 rentals right now.
cool. I'm gonna reach out to her. I'll listen to that episode.
Yeah, there's a few. I think my mom even reached out to her. She's like, "Oh, I love this woman. Like, she's got it going on. She's got it going on." But it's I like that. And I think kind of wrapping this up. It's people are looking for that unique experience, and I really like what you said. Is you're trying to find how you can really blend your business into your life, and I think that there's this really beautiful idea of, like, going out to an area, creating a little community with the farms outside of where everything is, the hotels and the busyness, just catering the short-term rental, vacation rental life around your business and how that best suits you. I think it's really one of the beautiful things about this business.
Yeah, absolutely. Yeah, that's why I love it.
Awesome. Well, Kirby, what's the best way if anybody can reach out to you? If they had any other questions or they want to be able to listen to you and your podcast, what's the best way that they can find you?
I think livingoffrentals.com is probably the best way. So that's where the podcast is, and I'll link to our YouTube channel as well, or just go into YouTube and search on Living Off Rentals. But you guys were on, you and your partner John were on, which was an awesome episode. People can check out. And there's other short-term and long-term rental owners on there. So I think, and I do a lot of solo videos as well on topics. So that's the best first way, I think, to get questions answered. And then I'm always open to setting up a call or talking through any other questions too.
Awesome. Well, I appreciate it. Thank you so much, Kirby, for taking the time. And until next time, Host Nation, keep on hosting. Hope you hosts benefited from the show. If you found value, please go on over to iTunes, leave us a review, and let us know what you enjoy about the show. If you'd like to talk to hosts that have been featured in these episodes as well as the community, go on over to our Facebook group, The Host Nation.